Welcome and good afternoon, good morning, good evening, depending on where you're dialing in from. So we're just seeing the first people come in and connect. Just to check in, if you guys want to just type in where you are connecting from into the chat box. So just tell us where you're coming in from, and then we'll get started in about 1 minute's time. Here we go. So we have Brazil, Oslo, Ireland, Mauritius. Hello, Alvinish. Mexico, Romania, Italy, Turkey, Birmingham, Johannesburg, Dubai. It seems, Simon, we have quite a mix of participants with us today.
Fantastic.
And Alan, I just saw you coming in from Calgary. What are you doing this early? What time do you guys have in Calgary? We have somebody here from Italy via California. Yeah, there you go. So Simon, Alan, a good friend of ours, he's joining us from Canada, and it's 6 a.m. and he's up and about for this webinar.
Wow.
That's the attitude that we'd like to see. So good afternoon, everyone. Thank you for joining us. Thank you for connecting. And Simon, welcome. It's a pleasure to see you.
Great. Well, I'm delighted to be here. So thank you very much, Christian, for inviting me.
So Simon, I don't know if you know this, but I've been following your work probably for some years. But it was really the publication of Fightback that we're going to be talking about today that really got me to sort of go back and review again. And I have to say, I'm really happy that you're here and you want to spend a little bit of time with us, because I think that the work that you and Felix have done here is not only of the highest quality, but it's really, really important. It's important for companies, but it's also important for societies. And you do talk about Europe. So Simon, if you're going to say like the one-line preview of Fightback, what would you say?
Well, it was written before the crisis, and the title is actually even more relevant after the crisis. But it sort of says it all in that title, which is, how do traditional incumbent organizations fight back against old ways of thinking and acting so they can be more successful in the future? And those organizations can be private, commercial organizations, but the principles are the same for public and government organizations as well.
And, maybe to jump the gun a little bit, are you more optimistic or less optimistic about Europe's prospects now after or mid-crisis than you were pre-crisis?
You mean commercial prospects?
Yes.
Economic prospects. I'm sort of mixed. I think, we've got so much talent and expertise and resources and power in Europe that, of course, we're a very, very powerful region in the world. And I don't feel any different pre or post-crisis to our opportunity as Europeans, let's put it that way. I think it is a wake-up call, because as we'll talk about later on, what you've seen is organizations and countries which are using more digital business models are doing much better and are more resilient in this crisis. So it's showing up more about how maybe in Europe we're behind the times and is exacerbating the differences between us in Europe and parts of America and parts of Asia.
Yeah, no, Simon, I'm really looking forward to the conversation that we'll be having today. So for those of you just joining, this is currently the sixth and the final speaker series. So we've had Scott Anthony and Rita and Alex and Bill and Rick and Simon finally. So Simon, we've been planning for this, and I'm really, really happy we can make that happen today. So welcome, Simon, and welcome everyone. So I'm going to give a quick introduction before we get started. And as you probably know, you can use the Q&A during the webinar or towards the end, and we will have we'll make sure to have plenty of time for discussions. And if you guys have been catching up on Fightback over the last couple of months, maybe you have probably even more and maybe even better questions than I have for Simon. So please fire up your questions as we go. So my name is Chris. currently stuck in Norway, happy lockdown. We are allowed to go to the beaches, but it's too freaking cold, even with the neoprene wetsuit. So we're hoping for an early summer. But Simon, I've worked on numerous projects around digital transformation platforms, building up hardware companies, building up software companies, both as an advisor and an investor. And I think the timeliness of what we have here is really important. So Simon, your background, you have an extensive background, you're author, you're faculty at Singularity. What is your background and how did you get into this space?
Yeah, well, I suppose most of my career has been as an advisor to companies. And so I've been a consultant or advisor in different roles. I've set up my own advisory and research businesses for the last 20 years. So I'm sort of part entrepreneur, part advisor. And I always like to look ahead. So I've always been in innovation, never quite comfortable with the status quo. And I was working in the telecoms industry, or I was advising to the TMT industry about 12 years ago. And I remember one of the CEOs, this is in 2008, so the iPhone had just come out. And at Mobile World Congress, which is the biggest event in the world for the mobile industry, 50, 60,000 people come to it. The impact of the new companies like Apple were just starting to be felt in 2008. And I remember at the leadership event there with all the CEOs, one of the CEOs stood up and said, 2008, this is the year of the business model. We've got to think radically different. Otherwise, we could just be commoditized with people like Facebook and Apple and others. And so I thought, well, okay, the CEOs are saying that. So what are the business models that telcos need to adopt? And so I did a lot of research looking around what digital business models were working back in 2008. And of course, it was the platform-based business models that were coming out of Silicon Valley. They were very, very powerful. Amazon was already a powerful force. Apple was just emerging there, but it was clear where the direction of travel was going. And so I set up an initiative called Telco 2.0 to look at the new types of business models that would be impacting the telecoms industry. Now, I mean, fast forward, the telecoms industry has barely changed at all. It was fat and happy in those days. It was making so much money, it didn't really care. But, relative to other sectors, it's now declined and is on a sort of plateau. It's become a utility. But what was really interesting for me is it got me to look at and to really try and understand the new business models that were emerging in a hyper-connected world. Platforms are most important. And then I spent the last 10 years focused on that, how to help incumbent organizations to work out how do they play in an increasingly platform economy in different roles that they could operate. And I guess that's now become really, really important to many companies and many sectors around the world.
Including, the World Economic Forum and Singularity, and I'm guessing quite a number of conferences that you would normally travel to this time of year. It is it's interesting, Simon, because what we're going to cover today is we'll have a brief introduction, then we'll hand it over to you for sort of the main presentation, and then we'll have more of a dialogue and get into, and already I have numerous questions around your views on the telco sector right now. What are things they could have done versus what things they can do now, but we'll get back to that. And also we have the questions from the participants. Now, I'd like to take 3 slides to set the scene briefly, and something that I've been paying attention to probably for the better part of 2 years is really Europe's competitive position. And I was very pleased when I saw that in your book, that you put such an emphasis on Europe's role. And this has really been, I don't say this lightly, this has really been worrying me in terms of the long-term competitiveness of Europe, both in the Nordics, in more Central Europe, and also in the South. When we see the consolidation of capital, and we see the consolidation of competence and brains and people on sort of both the Chinese and the US coast. And there's a chart that I've been using quite actively all over Europe. And Simon, I know you know this space much better and much more detailed than I do, but people get this slide. And people get the trend. And when we start getting into discussions of what should Europe do, or more specifically, what should European startups and European scale-ups and European corporates and European investors do, because it's not a company play, it is really an ecosystem play. You know, we don't get a lot of good answers. So again, your book on Fightback is extremely timely because it helps give some answers of, you know, what do we actually do here. So Simon, I'd like to wrap up my little introduction with just a, again, reference to your book. And Alan, Canada, Henry, Dubai, and everyone else from all over the world, you're probably going to have some time on your hands in the next couple of weeks. I would urge you to get your hands on this book. It's really, really one of the best and most important books I have been reading in the last couple of years. So Simon, I'm thrilled to have you. I'm going to hand over the controls here to you in your presentation, but we're really looking forward to hearing more of your insights and your stories.
Well, thanks, Christian, and thank you for very kind words, because you know, producing a book, it's strange actually nowadays why you still have to produce, you know, a physical thing to be recognized as some sort of expert, when in fact a lot of the ideas in there were based on a online course I created for senior execs called the New Growth Playbook. But people still like physical books to read, and it's still a major medium for people. And thank you for your kind words. And putting together a book is an enormous undertaking. And not for the faint-hearted. I wouldn't recommend it to everybody to do. But what I was going to do is share a few of the themes from the book, and also how I've been communicating the messages to corporates from multiple sectors recently, what seems to be resonating most. And I put together I've got about 10 slides here to share with people. So shall I just go through those and then we'll have a discussion afterwards?
Please do. Wonderful. Absolutely.
Yes. So I think one of the key things was that for traditional businesses, incumbent businesses, it was pretty difficult before the COVID crisis. And some surveys done of 2,000 C-level execs in 2019 just showed how worried they were about the impact of digitalization on their businesses. And you can see here, when you've got 90% of CEOs saying they are worried that their existing business models might not remain economically viable as their sector digitizes, then you've got a real problem here. And what they're talking about is, what they recognize is that as digitalization pervades a sector, what tends to happen is that it increases costs for incumbents because they have to keep up with maybe new regulatory requirements, but more so to do with new demands and expectations from consumers, new entrants that come in nibbling away at their most profitable parts of their businesses. And you get into an arms race where you're trying to keep up with your competitors. You're spending more and more on digital investments. But all the value is going to customers. They're getting better, cheaper services, and you're not really getting much of a return. In fact, the second stat you can see there shows some analysis that McKinsey did of the return on investment, the economic value added, that's profits after cost of capital, from 1,000 businesses in the US and Europe. And they found that those companies were getting, or 85% of them were getting, zero or negative ROI from their digital investments. And then, as you know, traditional companies are pretty good now at innovating with their core business. They're pretty expert at that. The whole business is set up to do that. But doing breakthrough innovation or digital innovation, CEOs are not so happy with. And that was all pre-crisis. So, and of course, it's different for different sectors, and how far a sector is information based or is getting more connected. That impacts the impact of, or that impacts the rate of digitalization and disruption. But now with COVID, we're seeing that accelerating even more. And as we know, some industries are dramatically affected, like travel and transport, and others are, potentially, have the potential to do pretty well. So all of that was before the crisis. And what is interesting is when you look at what type of business models do work. And this is some analysis that looks at a basket of companies that have incorporated platform business models into their mix, comparing them with in this case, the German stock exchange, the US stock exchange, and then let's say the pure tech stock exchange, the NASDAQ. And for companies that have incorporated platform business models, like Amazon, eBay, Facebook, Google, and others, they're doing pretty well in spite of the crisis. They're actually worth more as businesses than they were 4 years ago. They've increased their value. And if you're a traditional incumbent in Germany, if you're an investor in that, you've lost money over the last 4 years now. And that's the same in France and UK and elsewhere, because most of our stock exchanges of big companies are made up of non-digital businesses and certainly non-platform businesses, as you showed. And in fact, I run an event called the Platform Economy Summit, which is all about helping European businesses to understand these business models and adopt them. And we had the German Minister of the Economy who opened the first event 2 years ago, Peter Altmaier. And he said, that the platform economy is the biggest economic revolution since the social market economy that emerged after the Second World War. And he said, just like you were pointing out, he said that we have very few platform businesses in Europe. I mean, many of our startups are platform businesses, but the core businesses, core corporates are not platform businesses. And in fact, the impact of that is shown by the decline in the proportion of European corporates that are in the top 100 of global corporates. So US share is going up, China is going up, but Europe's share of top 100 companies is going down and has been for the last 4 or 5 years. And so, this is quite an important topic, particularly if you agree with some other McKinsey analysis, which suggests that 30% of global economic activity could be mediated by platforms within new types of digital ecosystems in the next 5 years. So 30% of global economic activity is $60 trillion of corporate revenue being mediated by platforms. And I say those figures, and 60 trillion, some people confuse 60 trillion with 60 billion. It's 1,000 times more. It's just huge. Whether it's 30% in 5 years or 40% in 6 years or 10% in 3 years, it's a very big shift in the fundamental way that the economics of business and society are working. And the reason for that, I'll sort of try and sum up the reason in a second, is because platform business models take advantage of the developments in technology. And if you can suddenly connect people together, not just people, but things, we know about the Internet of Things, but also our bodies. Our bodies will be connected pretty soon to the internet. And people will be able to do clever things to monitor our health, just as we're able to do clever things monitoring cars and other physical goods now. But the platform business model simply says, we're a bit of software that acts as an intermediary between supply and demand, between people who've got something and people who want something. And a successful platform business connects them together in an effective way. And so the simple example is, let's say Uber connecting people who've got rides with people who've got cars with people who want rides, connects them together. And once it connects enough people together, it's created this powerful system. Or if you take Amazon with its marketplace, it connects nearly any, I want to buy nearly anything. I go to Amazon and it's got it all. Unlike a retailer, which has to, buys in inventory and resells it, has quite a limited offering, whereas Amazon has nearly unlimited offering. Or Apple with the App Store. Compare it with Nokia that had some tiny number of apps. Apple said, let's not do this ourselves. Let's let other people invent things for our customers. And then let's create the incentives to make that happen, and then create the software that connects people effectively together and creates the right level of quality and governance for that. So this business model of being an intermediary between multiple parties is very powerful. And it's summed up by the tweet you can see top right here from the CEO of Airbnb, who said a few years ago, Marriott wants to add 30,000 rooms. It's going to take them a year. We can do that in 2 weeks because we don't have to build any buildings. We take advantage of other people's buildings and we add value to them, and people want to find cheap places to stay. And it's that asset light element of a platform which makes it very powerful. Once you can get the network effects, which means that the more people who use it, the more valuable it is for all parties. And where successful platforms understand that, they're able to build up liquidity such that it's so valuable to go to the platform, to find a holiday, to get a ride, to find a product, to get apps, find knowledge, etc., that they come back more and more often. And the successful platform business works out how to create some control points so that people do come back and stay on their platform rather than going elsewhere. So control points might be, for example, with Uber, the GPS. So it knows where taxis are at any one time. So it is then able to make the matching between people who need a ride and people who've got rides. Or Apple with the quality thresholds that it requires for app developers to distribute through them. So this type of business model is becoming more powerful because more and more things are connected and more things will be connected. And it leads to potential commoditization of suppliers. Very good for customers, and is a big threat to traditional companies who are thinking, well, what's our role in this world? And this is what I try and help companies think through, because you don't necessarily have to be just the central platform creator to be successful in this world. And in fact, there's many ways to participate and profit. You as an organization, well, you could try and create your own platform business. And that's quite difficult, as we'll talk about in a second. But equally, you can, and many companies do, sell through platforms. You need to think very carefully about pricing and other issues related to that. Equally, you can be a customer of platforms to access new talent or new services or new software or new capabilities that you don't currently have. Or you could create workflow tools that are embedded in other people's platforms. And particularly if you're in the financial services sector, there is an enormous opportunity to embed financial services into third-party platforms now, so that when you buy when you access a digital service, there is a loan. You have the option for a loan to buy it there and then at point of sale, or you already see examples of this when you buy a flight. Do you want to buy some insurance with it, for your flight? But that market of embedding financial services into digital services is due to be enormous as more and more things are digitized. So there's many opportunities. And then what I try and help companies with is thinking about where to play and how to win in this evolving market. Because we often think we need we need to create our own platform ventures. But the challenge there is that you need completely different skills. You can't possibly create a platform business from within the core business of most corporates, because that business is set up for a certain type of business model which doesn't have the same characteristics or economics or skills that are required to make it effective. And when companies try and do that, they nearly always fail. So what I say there is, if you want to try and create your own platform ventures, you need to do it. You need to collaborate with entrepreneurs who've got the skills in doing that. And you need to create a separate space in your organization for that to flourish. That's what we talk about in the Fightback book, is how you create this, let's call it ambidextrous organization, where you have the core business and then the new business. And you may need to make sure that these are separated with different skills and activities and different metrics. But critically, and this is the bit that most companies haven't worked out how to do yet, but critically, you create a way for both parties to support each other. Because the danger is, if you create new disruptive digital businesses over here, which don't have some connection with the core in terms of leveraging their assets and capabilities or feeding back knowledge and skills back to the core, then you get strong tension, and the core business can get bored with this new stuff when things get tough in the core, and they cut the funding, and then this stuff is doesn't scale. And equally, the new businesses, the new digital businesses like new platforms, require the assets, or require to leverage the assets of the core business. And unless you create a governance model that allows the new businesses, the new platform businesses, to access those assets, then again, this has less chance to scale. And I pick out a few examples here, because we all know the examples of Amazon and Apple and Airbnb, but in terms of traditional companies, I pick out a few examples here of people who are doing platform activity, which is not just trying to replicate Uber, be the Uber of whatever, which is a very, very thankless task, I would suggest, for most companies. And I've listed on the right here the different type of execution vehicles that companies can adopt. And my favorite example at the moment of a traditional company who's really thought about this fully is BP, British Petroleum. So it has an existential crisis in terms of people don't want fossil fuels in the future, but it's got, it's probably got 30 years until that game plays through. But it's tried in the past. It tried all kinds of innovation theatre. It had venture capital arm. It had hackathons, incubators, accelerators, all kinds of things to do advanced digital activity. But it realized that none of that was really moving the needle. And some colleagues of mine created a peer group with other big companies to say, look, how do we overcome this fundamental tension between the core business and the future business? And they created a framework for scaling up new digital businesses like platforms within corporates, and the type of operating model you need to put in place. And BP they're one of the few companies who've really gone public and said, this is what we're going to do now. So they announced, they've been working on it for about a year, and they announced it in December, where the CEO of BP said, we are going to create a new business unit that acts as the, if you like, the gearbox or the connector between the core business and the future business. And we're going to put 500 million into that. So it's quite a significant amount. And our aim is to create 5 unicorns over here. But equally, our second aim is to add 5% to the EBITDA margin of the core business, which is about several billion. So they had a core business metric and a sort of digital metric. And then what they've done very cleverly is they've created the operating or the governance model that allows these businesses to either collaborate with entrepreneurs to create new ventures, who've done this before, A-grade entrepreneurs, or to create internal ventures, or to do M&A or other types of spin-offs. So they've applied, if you like, advanced VC thinking over here, but critically, they've also created the ability for the new ventures to access the corporate assets in terms of procurement capability, marketing capability, access to customers, technologies, et cetera, and they've created contracts with the core business such that the people heading up business units over here can see the value of these ventures to their bottom line, rather than it being seen as some sort of competition or cannibalization. And the businesses that they're creating, they don't start as being, we're going to create the Uber for whatever. They start by focusing on solving real customer problems using digital technology, which is the starting point you should have for any type of digital innovation, like VCs like to invest in, but have the ability to develop into broader platform businesses over time. And this is my key suggestion to corporates at the moment. That's the model that they should adopt. And most that I speak to are stuck because they're trying to do things that the body, the DNA of the corporation just won't allow, and the antibodies kill it. So there are other examples of companies that have been even bolder, like Ping An and Sberbank in Russia, and Naspers in Africa. I can talk about these for a lot of time, but we might come back to that in the Q&A. I'll just finish off for now by saying that all of these, what I've just described here, these different, if you like, stages of platform activity are all legitimate. And the ones in the bottom left are the ones that will deliver short-term value quickest. And what I say to companies is that you need to focus, when you're thinking about a portfolio here, you need to focus on ventures and activities that can deliver 20% of net new revenue in the next 3 or 4 years. And if you can do that and define a portfolio that can deliver that, then you'll get the support of the core business, which has all the power and the budget. So just to wrap up, and I know I could talk about this for hours, but just to wrap up, Ping An is one of my favorite examples worldwide. They were an insurance company. They operated in, the green is a very traditional insurance business model. And they looked at Alibaba and Tencent and others in China and said, my God, how do we play in this world? How do we learn from these incredible companies that seem to be growing so fast? And they decided a few years ago they said, we're not an insurance company. We're going to be a tech company with insurance licenses. They put their money where their mouth was, and they changed their business model portfolio to invest in digital businesses and what they would call third-party ecosystems. So platforms completely outside of insurance, in buying and selling cars, real estate, telemedicine. And as a result, they're now one of the most valuable companies in the world. They're worth more than Europe's biggest bank, HSBC. They used to be worth a fraction of that. They're worth more than Europe's biggest bank. And they're now the biggest private investor in HSBC. HSBC used to own a big stake in them. They sold it during the financial crisis, and they must be kicking themselves. So, yeah, so just to finish, 3 big things. I know that you've been talking a lot about this with your other guests, and I just want to reiterate it. Leadership mindsets, management systems, the operating models, and then the methods and skills. And let's explore those in a second. And then in our book, I talk about the 5 key levers to renew your business model if you're a corporate. And you can see them here, and they're described in the book in more detail. But these are really the things. If you can't do this, it's just not worth bothering. Just stick to your knitting and be a traditional business. If you can't work with your leaders to understand new types of economic models, you'll never get the funding or support. And you need to understand, like McKinsey has, talked about, the new types of ecosystems that are emerging, that are created by boundaries between traditional sectors blurring, and where could we play? in new ways. And you need to put your money where your mouth is, not spend money on the same way every year. Create this true ambidextrous organization like BP has done. And if you can do that, then you can widen your scope like Ping An and others. And you can ultimately, and this is the ultimate aim of this, is to wow your customers. You know, the customers of the platform companies have much higher net promoter scores than traditional companies. So those are the main things I wanted to say. And the final tip I would offer to, if our listeners are people working in innovation or strategy within traditional companies, is that we need to make this tangible for our leaders and our business unit colleagues. And the best way I find is when you work through with them how we could create new ventures and initiatives, which are not, you know, Uber for whatever. They're the more down-to-earth initiatives that can deliver, as I said before, up to 20% of net new revenue for our business within, let's say, 3 to 5 years. And this is an example of a company that I was working with on this. And you can see how you can apply, you can look at, once you get into the detail, you can look at how different types of platform and digital activity can add value in different ways, protecting the core, creating adjacent solutions, or even creating white space ventures. And if you combine that with M&A activity, then you can show quite an interesting new growth profile. But unless you've done the 5 steps of renew in the previous chart, you'll never execute that. But this is a very good way, sitting down with your colleagues, to work it through, bring it to life with tangible examples, and make it into something that they can understand and they can support. So those would be my main thoughts and messages.
Simon, this is probably the first time that we've had guests on, and I'm not quite sure where to start. I mean, there's so many conversations, and there's so many points, and there's so many threads here. Let's start with the last one, and I already see some of the questions coming in. That's wonderful. So this final slide. This is revenue for an established incumbent. In 2019, they would have around 5 billion revenue, and the target would be to drive it up to 16.25 billion revenue in 5 years. Correct?
Yeah, this is done before COVID, I have to say. So
yeah, that's fine. That's fine. How do you see? So you introduce a lot of new platform-enabled growth here, and 5 billion in M&A. How do you see the difference between revenue and value as expressed in market cap? So any thoughts on how you do value creation differently once you get into more of the platform-enabled growth?
Yeah, exactly. And it's a really good question. And I was asked this question only last week, actually. So it's really, you know, it's starting to, that question is starting to come through. And I was asked it by a retailer, a very big global retailer, who has only just woken up to the concept of marketplaces, online marketplaces. 20 years after Amazon created an online marketplace, which drove its growth. And I spoke to them, their chiefs, or their strategy group. And they said, this crisis actually has forced us to fast track something we've been thinking about for 15 years.
Yeah.
And because now, you know, everybody's online trying to, I try to get some hair clippers. I got my daughter to do it in the end, which is not so good, as you can see here. But it took me, I went to the normal e-commerce sites and even Amazon, and they're all sold out because we're all at home trying to get a haircut. But those businesses that didn't have a marketplace are at a massive disadvantage. Yeah. So that company is now fast track its thinking about platforms and marketplaces. And then the question now, it's gone right up to the chairman and CEO, and he's saying, what could this do for our valuation? Exactly to your question there. Yeah. And what I said to him is that, unfortunately, you've got a problem with that your investors see you as a certain type of business and they expect a certain type of return. And they, particularly for banks and other sectors, that they don't want you necessarily to move outside of your box, because they've put you in a box in terms of the type of business you are and the type of dividends and so on that they expect. And unless you can have a good dialogue with them, they may constrain you from doing the types of thing that you see here or making the investments. Now, what's interesting now, though, is in a COVID climate, I think we can do things much more boldly. The investors will give us the latitude to think more creatively and to place bigger bets in areas where in the past they might have prevented us. And so valuation is really what is a combination of what investors expect you to be able to execute against.
Yeah.
So I speak to a lot of analysts, and I say to them, it'd be great if insurance companies could do this. How would you re-rate them if they did this chart that I show you? And I say we wouldn't, because we don't believe they can do it. Yeah. So we have to do things under the radar to start with. We have to demonstrate that we can do it before we then earn the right to be re-rated by the shareholder community. And the only way of doing that is if we put in place the governance and operational models that I talked about, like BP's, that will enable us to do it. So valuation has to be earned and can only be delivered once we put in place the right foundations.
This is a really interesting point, Simon, and I really recognize what you said in terms of the analyst quote, "We don't believe they can do it," and end quote. Are you familiar with the small company in the US called Chegg? Chegg. Chegg.
No.
It's, neither was I until just recently. They used to be a college textbook company. So they would basically have on-campus textbook stores, like bookstores. And they went through a transformation process, and now they are a two-sided platform for sort of college students and younger. But the interesting thing about that journey, and it was around a 7 or 8 years journey, that was how long it took the financial community, and it was a publicly listed company, so it was how long it took the financial community to actually react to the shift in business model that had taken place. So even though the new revenue was coming in, they were still getting beaten down on the old metrics from the analysts. And the share price went from 4 to 3, and it kept just going down, even though the new sort of narrative was coming through. And then eventually when it shifted, it went from 3 to 7 to 28 to 32 to 64. And now it's close to 70. But it was such a big challenge for the CEO to get the financial analysts to actually understand that they had done exactly what you have on this slide here.
Yeah. Well, it's interesting you say that, because I'm working with a very similar company, and they have the similar challenge. And the additional challenges, of course, is that VCs aren't waiting for corporates to work it out. They're pumping in a lot of money for online education and learning, and those companies are not constrained by analysts or shareholders, or traditional shareholders, or technologies or out of date assets. So this is where, again, what a corporate, if it wants to jump into a space like that, doing it from within the core is really risky and time consuming and full of challenges. And again, in the book, what we talk about is the need to collaborate with entrepreneurs and not startups. So there's a difference here, but A-grade entrepreneurs who've done this before, and they've created a very successful business. They've exited. They're looking for that. They always want to do new things. They don't want to work for a corporate. They'd never do that. and maybe they don't want to start again with a VC because that has its own stresses. And they look at the assets that corporates have and they say, my God, if I could start with that, it would save me 3 years of pain. If I could access those assets and create a digital venture using them, wow, what I could do. So, it comes back to those vehicles I showed on the previous slide on the right there, the different execution vehicles. What I'm saying to companies now is there are a lot of, and we talk about in the book, there's a lot of entrepreneurs like that who would love to create ventures with corporates, but you need a new operating model for that. And Ping An, one of the best examples I mentioned before in China, that's how they created their ventures. They created entity structures that had incentives that attracted A-grade entrepreneurs to drive those businesses forward. And they've created a stable now of, I think they've got about 8 or 10 digital platform ventures, which collectively are worth 80 billion, over from the last 6 years. And that's because they did not do it internally. Right. And that's what, similar BP is saying, we're going to create 5 unicorns, but we're not going to do it internally. And I think that's one of the, it's the executional approach, which is really, really critical, as we talked about.
So I want to take us into some of the questions, and the questions are really aligned with the discussion here, Simon. If we start at the industry level, what would be some industries that you are seeing right now that are almost, ripe for disruption by digital and platform-based competition?
Normally it tends to be, it's in any sector that is information intensive. Yeah. So of course, so media is one that's already been disrupted, and music, when it was digitized, was disrupted, etc. So ultimately it's every sector, because everything gets connected, and you can then create marketplaces or intermediaries that matches supply with demand. And then the suppliers in that market can become commoditized. That's hence the success of companies like Alibaba and others, which act as intermediaries. But some of the sectors that I'm working with that are increasingly disrupted, of course, retail. And if you don't have a marketplace, 20 years after Amazon had one, what are you doing? Because customers, they want to buy. They go to one place. They want to buy. They've got a multiple set of needs, and if they can't buy it from there, they go to Amazon. But what we're finding is that there are lots of niche parts of the market that retailers can dominate and protect against Amazon, and so. There's quite a few retailers that now have put in place marketplaces, and they're doing quite well. Good examples, particularly in Latin America and Europe and elsewhere for that. Come back to that later if we have time. Financial services, of course, is being heavily disrupted, but it's more of a slow burn. The big banks are they're like frogs being boiled slowly. They're on a downward slope at the moment, and they tend to track GDP. GDP is not doing so well. And so that's just going further and further down. So for a long time, we've been saying they need to have a beyond banking platform strategy. And unfortunately, most of them have tried to do it from within the core business, and not really got much return on that, or they've done a bit of innovation theatre. So that would be another one. Financial services, really needs to act quickly now to come out of this. And as I mentioned before, there is a very significant opportunity with embedded finance, which is becoming more and more prevalent. And then if you take online learning, we just talked about that. That's a huge growth area, but not if you're a traditional textbook supplier. And even manufacturing, of course, and different types of manufacturing is getting commoditized. So BMW worries that they'll just become a component part of Apple's business model in the end, even BMW. So different sectors, different time horizons, but I would say every sector like we saw that very first statistic I showed,
Yeah.
90%, that's across multiple sectors. The 85% of digital investments getting no ROI or negative ROI is across sector. And I think it's a wake-up call for everybody.
So, you know, going back to your very first slide with those statistics, I know there's been a lot of big bang digital investments like GE Digital with Predex and others. How do you see, I mean, what are we learning? How can big companies avoid these massive investments and massive blow-ups, effectively, of their digital initiatives?
Yeah, well, it comes to, I mean, I repeat it, it's don't do it in the core business.
Yeah.
I mean, it just won't work. I mean, as I said, I run the Platform Economy Summit, and every year I have to, my task is to bring corporates together with other corporates who are doing this well. Yeah. And there are very few. I really can't find very many. No. And so I have to bring them together with startup companies and entrepreneurs who are working with corporates, or I have to bring Chinese, you know, the Ping Ans into the room or others. So we still have this mentality of trying to do everything ourselves. Yeah. And platforms is all about leveraging other people, whether it's, you know, startups who've got component parts that we can plug into our business, yeah, or entrepreneurs who would love to use our assets to create new ventures, or developers who'd love to develop applications on top. So I spoke in the book, actually, we did an interview with the COO of GE Digital. So he told us all the issues they had, but it was all the things I've just mentioned, and not having a strong enough governance model, like I mentioned, with the BP is putting in place to deal with the tensions with the core business. Yeah.
Building on this, and you know, taking us from the big companies to the smaller companies. So Europe has a lot of family-owned businesses, a lot of SMBs. What are some good advice? What are some tips for the more mid-size, mid-market companies in terms of their opportunities when they have limited resources, etc.?
Yeah. Well, it depends, you know, it depends on the size, of course. And there's a huge Mittelstand, of course, in Germany and some other countries, which are actually quite sizable businesses. You know, they're in the 2 billion, 4 billion range. So it slightly depends if you're the, you know, 100 million to 4 billion, you know, there's different opportunities for you to play there. But I think I would say the principles probably apply, the same principles I've described here apply. And there's different opportunities for you, whether you're thinking about distributing through platforms or creating enablers for platforms or creating your own type of platform ventures. But I would say the principles apply. I mean, it's these 5 things here. If we don't understand how the economics of digital business models work, you know, at the highest level, then we're never going to create the right commitment to them. And I think the principle of saying, well, we have some great assets. We're probably not the best people at creating digital businesses out of them, but maybe we can work with some entrepreneurs to do that. And you create a, you know, JV structure for them to do that. I think that's a valid thing for mid-sized companies. And I would suggest these 5 things are just as valid. You know, and the ambidextrous organization where you put, you know, set up a different unit to create those partnerships or collaborations or joint ventures or disruptive innovations. So I would say that would be the same. It's the same principles, just applied in a different way.
Now, have you, you said the same principles applied in a different way. Have you applied any of these principles in Latin America? One of the questions we were just getting was, do you have any experience yourself with Latin American companies in any way?
Yeah, well, yes, absolutely. I mean, I haven't executed projects there myself, but I track what's going on quite a lot. And of course, the market situations are different there, but a bit like other if I call it emerging markets, there's an opportunity to leapfrog, of course. And there's a wonderful, there's lots of examples of really exciting businesses in, Latin America is an enormous region, but in mobile payments and mobile-based solutions to really leapfrog. And there's a great company called Magazine Luiza, Magalu, which is a retailer that's grown incredibly fast by applying a marketplace approach and beating off Amazon locally. I'm actually just starting some work with some banks in parts of Latin America who are wanting to create platform business models, in the mold of in the model that we've described. So embedding finance in other people's platforms, not just creating their own. And I would say that there's probably more different, but many opportunities there, particularly for corporates to collaborate with smart entrepreneurs to create new ventures. And again, I would say the principles are the same that I've just described in this talk so far. So one of the companies I work very closely with is Startup Bootcamp, operated or started by Rainmaking, and they have a very big operation in Latin America. And I think obviously there's loads of startup opportunities and VC opportunities, but I think what we'll start to see is more of this collaboration with corporates between either startups, but also individual entrepreneurs to create new ventures. And I think that's the exciting emerging new space. But for corporates, they still need to do the things I've described here.
Yeah. So one final question, and we're almost at time here, Simon. Yesterday, SoftBank put out some pretty depressing financial results. They introduced the phrase "Valley of Corona Debt." Airbnb was scheduled to go public. They've cut down 25% of their staff so far. Company valuation is significantly down. Do you think we're going to see any long-term challenges with the asset-light business models, or are the platforms and the asset-light business models going to bounce back better than the asset-heavy ones post-COVID?
Well, I'll tell you what investors think. Here we are. That diagram. There we are. So
Good answer.
So asset light, if we're not allowed to travel and we're not allowed to connect with people, I think asset light's a pretty good business to be in. I wouldn't want to be in WeWork, which was never a platform business ever. It's never a platform business. It's a real estate business. So, anything that's high touch is not a business to be in. And asset light is going to become even more valuable as we're learning to use more digital products. So most people think that digital transformation will be accelerated. What is the most powerful business model in a digital world? It's the platform business model. And I think the 30% of global economic activity mediated by platforms, maybe it'll happen quicker. I don't want to, maybe it'll happen quicker or slower, with the dip, because the economy is all going to be suppressed for several years, of course. But I wouldn't want to be in an asset-heavy business right now. And so I think the imperative is even stronger to understand how you play in this world and to execute in a much more bold and effective way. This is not trying to be, as I said, we're not going to try and create an Uber. We're trying to create digital businesses that can leverage the skills of people who are really good at executing them and make the connections with our core business such that we can take advantage of their assets. And like BP says, maybe create 5 unicorns, but also add 5% to the EBIT bottom line. I would say that.
That's a bold mission statement right there. I'm looking forward to following BP's work. Simon, we are on time here for the hour. If you want to read more, guys watching this, Fightback is the book, and also Simon has a really solid online course, the New Growth Playbook. You can find more information in the email that gets sent out with recordings. Simon, this has been really, really a pleasure. I'm looking forward to staying in touch. I'm looking forward to following your work, and who knows where this could lead us. But thank you very much for your insights today.
My pleasure, Chris. Thank you very much for having me.
Everyone, stay safe. Have a good afternoon. Have a good morning. And Alan, if you're still with us from Calgary, have an enjoyable day, and I'll see you soon. All the best.